Welcome back to this week's market drama. The S&P 500 was down 3.5% last week. What was the driver there? You guessed it, inflation. The U.S. Producer Price Index came out for November. As a reminder, what the PPI measures is what companies get for their products in the pipeline, like what the price they get in the pipeline. The PPI index increased 0.3% month over month and 7.4% year over year. The market was expecting 7.2%. So it came in hotter than expected. And as we talked about in prior weeks, inflation is the biggest driver here. So if inflation remains a little stickier than expected, market's going to sell off on that. On the more positive column, the University of Michigan Consumer Sentiment came out with their December numbers, and it was up to 59.1. The estimate was 57. The driver there's a question around inflation expectations. And it came in that people are expecting inflation to be 4.6% a year out versus just last month, they were expecting it to be 4.9%. So a pretty big improvement there. You don't have to look much further than what you pay gasoline at the pump. The national average retail price for gas has come down to $3.33 on average. That's roughly down $1.69 just from June. So as gasoline prices come down, people feel a little bit better about what they should expect for inflation next year. So we'll keep a close eye on that. I could attest to that. When you go to the gas station, it looks a lot cheaper than it did just a couple months back. Okay, so what to look forward this week? This week is actually a big week considering we get November CPI numbers on Tuesday. The expectations are 7.3% for the overall number and 6.1% for the core. That excludes food and energy prices because those tend to be the most volatile. Then we also get November retail sales come out on Thursday, which gives us a pulse for how the consumer is doing. You got to remember the consumer accounts for 68% of GDP, right? Consumption accounts for 68% of GDP. So that will give us a sense of how the consumer is doing. Are they still spending money, et cetera? The biggest event, though, of the week is on Wednesday when the Federal Reserve will announce how much are they raising interest rates. The expectation right now is for 50 basis points. That will be the seventh straight increase, and it puts us around 4.25% when it comes to the federal, call it short-term interest rates. Now, they're also likely to update projections on how much they're likely to hike next year. And I do expect Chairman Powell to stress once again that the Fed will keep rates high for longer, or as long as it takes, as they've said, to bring down inflation. So I think a little bit of the sell-off this week was kind of in the expectation of like, oh boy, here we go again. Next week, the Fed's going to tell us that they're going to have to wait and see inflation come down significantly before they start talking about pivoting or starting to lower interest rates next year. So that's it for this week. Stay tuned for next week. Take care.